Stock Exchange. Here now, Sue Herrera and Ron Insana.
It's time now for Business Center's Market Focus. Tonight, Nancy Tengler joins us. She's the Chief Investment Officer of Fremont Investment Advisors, runs the Fremont New Era Value Fund, as well as the Fremont Global Fund. Nancy, good to see you. Thanks for being with us.
Thanks, Ron.
First off, what do you make of this week in stocks? Is it one we can trust, or are we going to be disappointed again after a decent rally?
Boy, that sure has been the question, hasn't it? I mean, I will say, I don't know about you, but I have a lot more fun when it's going up.
Makes it a little easier, anyway.
I actually think we're starting to get to the bottom, and this could be it. There's just been too many positive things coming out in the last week. Oracle, had some good earnings a little bit back and said they felt like they were getting to the bottom. Then you had Motorola, the first time they haven't missed in a year, and then Microsoft, and then GE. And I think the really interesting thing about GE's earnings was that you had hidden away in the press release some productivity-driven support for the really rotten businesses. So productivity is still really helping them out, and I think that's going to continue to be the story going forward.
Well, Jack Welch pointed out that the company's IT spending is up 12% so far this year, which probably drives that. Were you concerned that GE's revenues declined in the period relative to a year ago?
Yes, but what was interesting was if you looked at the foreign revenues, so the Europe revenues, if you took out foreign exchange, they were up 8%, which was a lot stronger than I thought they would have been. So,
and part of the revenue decline came from discontinued businesses too, I guess.
Right.
So, yeah. All right, so what about the overall picture then? Since we have now, I wouldn't call them pillars at the moment, but we have some stronger struts on which to stand, can the market maintain the momentum and continue higher?
I certainly think so. I mean, you've got the Fed, which we've all talked about ad nauseum, but you've also got this tax rebate, which I think people are underestimating. $300 is a lot of money, but it's not, enough to... I saw someone on your show talking about in 50 years it would be worth $30,000, and I don't really care, because I don't plan to be here. So I think most people are going to spend it, and that may, in fact, be stimulative, and that'll be very helpful. So, yeah, I do think so, and I think we're getting to the point where we're anniversarying really awful comps. And that'll be good.
Last year's earnings are so bad, this year's have to look better.
Right, sorry, yeah. When you get the expectations low enough, it can only be good from there.
All right, now, you manage a value fund. There's been a growth versus value debate. We've had a slight pickup in growth stocks relative to value recently. Which group will win if we are indeed coming out and starting to mount a more significant stock market rally?
I think definitely growth. We have two growth strategies. One is a traditional equity income value strategy, and the other one is what we call the new era. It's growth at a reasonable price. I think it's going to be growth at a reasonable price, not growth at any price that's going to win.
Real quick, you manage an international fund. Argentina,
yes.
Matter to you at the moment?
Yeah, it does, and we're really concerned. We've been lowering our allocations to international.
All right, we're going to leave it on that note. Nancy, good to see you. Thanks for being with us.
Thanks, Ron.
Nancy Tengler here at the New York Stock Exchange.